Hello, thanks for joining. So providing another Foenix Partners update to British Marine. I'm Richard Meo, and today we're going to be picking the brains of Tom Floyd, Senior Sales Trader. Hi Tom.
Hi.
So first off, I suppose obviously last week was a very big week in terms of the fallout from the US elections. We saw big reactions in the equity markets. Tell us about that and tell us how it fed into the foreign exchange markets.
Well, firstly, the equity markets, very interesting moves. The first move, as you saw, was a very sharp correction south. Didn't last very long, and actually the S&P and the Dow are now trading at all-time highs, and the first time since '99 that they've actually reached highs at exactly the same time. So interesting, and from that perspective. On the currency markets, similar sort of story. The initial reaction was dollar selling. The wave of dollar selling, however, lasted only a short amount of time, and actually the dollar has now strengthened to the highest level from a dollar index perspective since 2003. Now, the reasons for that, Donald Trump has often spoke about increased infrastructure spend, increased focus on fiscal stimulus. This in many ways takes pressure off the central bank and of the monetary stimulus that they've been feeding in the economy, into the economy since the credit crunch. So, if before the election the chances of the Fed hike were between 80 and 85%, those chances of a hike in the December meeting are now more likely 90 to 95%, hence why we keep getting this dollar move higher.
Okay, so do you think the dollar move is driven more by increased chances of interest rate hike rather than necessarily positive sentiment towards Trump?
I think so, yes. I think the Trump policies has, in many ways, strengthened the hand of the Fed, and therefore the four hikes that they spoke about at the start of the year. Whereas we probably won't get four next year. I do think that the interest rate curve for next year is definitely more aggressive than it previously was pre-Trump.
Okay, interesting. Okay, so obviously, definitely felt like there was a big shift towards the US. We all know why. I also felt like Europe started to emerge in the headlines a little bit, whether there's talk of kind of contagion. Tell us about that and why we're starting to see the euro weaken.
It's a very interesting point. So the US election almost followed suit after Brexit in terms of both were in many ways populist movements. They were screams from a silent majority for change. Now, the markets are looking at the euro, they're looking at the elections and the referendum coming up next year. So specifically, we have an Italian referendum in December, we have elections in France, elections in Germany, elections in Holland and Austria. With a view that if these movements do spread throughout other Western democracies, then we could get a shift change. We could get a movement towards more right-wing parties with the overriding, and I should say incredibly negative view, but the overriding arching view that it could lead up to a breakup of the Eurozone entirely. Hence why a euro which has been incredibly strong for many, many years is now starting to show signs of frailty.
Yeah, we've seen some big moves lower in euro dollar, haven't we? And certainly sterling benefited a little bit this week. I'm interested to know specifically France was in the headlines this week. Why is that, and how is it all interlinked?
So France had the Republican primary, the first vote, which was yesterday. It was widely anticipated that either Alain Juppé or Nicolas Sarkozy was going to be the front runner and the leader in that particular primary. However, François Fillon,
nice pronunciation, by the way.
Thank you. François Fillon came through and actually won that, effectively ending Sarkozy's career. Now, why is this important? This is important because Sarkozy, if you want to take a parallel with the US election, Sarkozy was always seen as a Hillary Clinton parallel, whereas Marine Le Pen being seen as a Trump parallel. Now, had Sarkozy won that, it would very much been seen as the populist vote for Trump, i.e. Le Pen, or the safest houses continuation of the status quo that Clinton and Sarkozy would have represented. The fact that Sarkozy hasn't won and François Fillon has instead actually weakens the hand of Marine Le Pen's far-right party. Therefore, any chance of a far-right party winning and therefore a referendum perhaps on EU membership going through France is far, far lower. Hence why we got a little bit of euro strength yesterday on the back of that result.
Interesting, okay. So we're not going to see the sort of a recreation of the kind of dynamic that we saw in the US then?
Never say never, but at the very least it's been delayed.
Okay, so crystal ball time now. Looking ahead at the next, I guess let's look sort of pre-Christmas, the end of the year. Firstly, what do we think the main moves are going to be in relation to, say, sterling euro or sterling US dollar? And also, who should be coming off the sidelines to get some stuff done?
Okay. I think the main moves, particularly for sterling euro, are going to be euro based. So we covered it off very briefly with regards to talking about European politics, but there's a very important vote going through on December 4th, the Italian referendum. Now, whilst this isn't directly related to European membership, it's about constitutional change. The current Prime Minister, Matteo Renzi, has suggested that he will step down if he loses that vote. Now, in Italy, the right-wing party, the Five Star Movement, have been making some very impressive ground. So therefore, in a very similar way to France, we're looking at perhaps another large economy in the Eurozone, potentially looking at an EU membership vote. So that's December 4th. That's going to be a very, very big risk event for the Euro. If the government lose that referendum, we will get some Euro selling, and I think beyond that, you'll be above 120 by the 5th of December.
Okay, good news.
That being the case.
Is that an opportunity for people to then be active, or should they hold off for further moves then?
Most definitely. The problem with political events, and we've seen this twice, is that they are very, very difficult to actually predict. Particularly in the case of Brexit, particularly in the case of Trump, and on this vote, there's no real precedent to really make a measured risk assessment of when one should buy euros or set their expectations. We should deal with what we know. We know that in very recent history we got down to 110. On the day of the flash crash, we actually got as low as a touch over 103. So you need to look at it in that context. If given an opportunity to be buying euros again above 120, it would be madness not to take it. And in fact, it would be complacent to the point of ridiculous in my view.
Okay, yeah, absolutely, because we saw 110 very recently.
Indeed.
Interesting. Tom, thank you very much. So you heard it here first, 120 sterling euro pre-Christmas. If you see that, then it's time to get some euro buying done. Thank you.